All right, we are live. So I decided I'm going to record my lunch session today. This will be the first time I'm going to stream my lunch raid session. I don't know why I haven't done that. I just guess I felt it was enough to record the morning session and skip this. But yeah, the lunch raid is one of my favorite setups. And let's just kind of take a look at the charts here real quick. So this is my trade from this morning. I took just a bonehead move this morning. It was on the 2-minute chart, and I took this inversion right here on the 2-minute. Now, I was patient this morning, and that's why I'm so frustrated. The way 930 opened up, I was kind of questioning, like, oh, here's an inversion. Took some liquidity SMT, but I just was doubting with the liquidity building up in there that was going to be it. And so I decided to stay patient, and patience pays. And I'm like, if price comes down into discount down in here, I'm going to long it. And so sure enough, got the inversion, longed it. And I had my stop loss like somewhere, where was it? I think the bottom of this candle or something. It was but it was misplaced. And so the way I typically would do it is I place my stop loss below the candle that closed below the inversion typically. Maybe I might, do this sometimes, but usually I try to do this more often than not. So, and I had room in my risk to move it. I could have, had I even realized it in real time. I realized it later, but in real time, I would have been like, yeah, I could totally move my stop loss to there and still be within my risk tolerance. And so anyways, I took a L on this W today, which was a total bummer because of the patience and just, it was my screw up. And I don't do that often. Mechanically, I don't screw up that often. I have other issues, but that's not what I typically do. So super frustrating on that one. So what we're looking at for the lunch trade, you can see this little box floating over here. So what I typically want to see is between 1240 and 110. I want to see the lunch trade. And so let's, what we can see this morning is that, so typically, let me get my stats here real quick. Where is it? There it is. Lunch has an 80% chance of continuing the AM trend, plus or minus. That statistic varies over time, but the multitude of times I've examined the data and collected it over more current periods of time, so what's NQ currently doing, it's somewhere in the 80% range. And so what we can expect, if we're thinking about a daily candle, open, high, low, close, is there's a lot of movement in the middle, So you have open, you have a low on a bullish candle, and then you get movement like this, And this is the lunch trade where I want to see price do something like this. And so you have the candle open low, it's working its way up through the AM session, kind of consolidates maybe midday a little bit, lunchtime. And then somewhere we see a raid on local internal liquidity before continuing on to form the high of the day. And that assumes that we're on a bullish candle. And that assumes that the low of the day was put in the morning and the high of the day will be put in the afternoon, typically after 2:30. Now, there are some instances where the high of the day is 1 o'clock. Or 11 o'clock. And so then the lunch raid is not going to help me out at all. But that's by and large not the case most of the time. So I'm going to show you some statistics here. So this is just, might look a little confusing, just bear with me. What we want to see here is just what time does the lunch raid occur? And here's last week, June 1st. We can see that Friday there was no lunch raid. Tuesday it happened. It really didn't happen, but that kind of happened at 11:50. So that was really early. And then Wednesday was 12:45 and Tuesday was 12:50. It does happen sometimes at 12:20, which is why I started recording right now. Because I'll take it if it's 12:20. I like it much better if it's the this macro. And then the week before, we can see the lunch raid was at 2:05. There was no lunch raid. There was a 12:50 short and there was a 12 o'clock long. So it's been a little bit different. But if we go back in time, I have the statistics. Not for currently, but for earlier in the year. Again, everything I got tracked. It's all on sheets of paper. And if it was, I'd show you on the screen, but it's much quicker for me just to grab these pieces of paper I have on my desk. So the lunch raid, there's a 59% chance of it happening between 12:50 and 12:10. So yeah, that's all. Some statistics to back up what we're doing here. So what we kind of see, we got this accumulation happening. I like this. Let's pull up ES and YM. And even let's zoom out a little bit before we go on to here to the 1 minute chart. Let's go back to the 15. So here on the 15-minute chart, what we can kind of see, obviously we look at, this is London session. So London took Asia's low. London protraction. We're above midnight. We've gone above 138 ER, average daily range. So I'm expecting price to likely reach for a full 180 ER. And that also aligns with 2.5 standard deviations of the midnight breaker, which is important. We can see we have bullish order flow. We can see that we already did have a retracement. So this is the 9:30 open, retraced into a discount for a long. And so what I'm hoping for is I want to see lunchtime retrace back down into here. And I know there's a little bit going on, so let me see if I can clean it up some. This gap doesn't really matter. We have a 15-minute inversion. We have a tailless candle. We have a fair value gap right here. And we have a fair value gap right here. So I'm gonna, oops, I don't want that. I want fair value gap, FG. And really, I'm gonna reduce the opacity on this one to make it a little easier. We want it there, but we don't want it to be the primary focus. So I want to see price continue to consolidate, come down to this tailless candle at least. Maybe this gap, ideally this gap, you can see we're down at the 50% of the range. And then from there, I'd be interested in longing. And what we have up here is some relative equal highs on the 15-minute. We have 2 to 2.5 standard deviations. We have the average daily range. We have this, above that is this 1 hour swing point. And above that is this 4 hour swing point. So we could see resistance here, and I'm being cautious and I'm aware of this. Like, this is definitely, how to say, or today's price action is a little abnormal. We got that massive sell-off on Friday and then just kind of a sharp response. There isn't tons of liquidity locally. We can kind of see from here to here is not tons of ideal high probability liquidity. That starts right up in here. But that's still, 500 points away from these relative equal highs from where we're even at right now. And I'm on alert. The market could want to be bearish. We've had a weekly change in state of delivery. We've had a daily change in state of delivery. So, longing, and really we have kind of this swing. We're at equilibrium of this dealing range. But if we look at like this dealing range, we're at equilibrium. But up here, we're still a little bit in discount. So, I want to take that into consideration. This is the context for the idea. And if it's bearish, it's going to want to come up to the 50% and reject. So there's that part of it. Now, on the lower time frames, what we can see that I like is we're building some really nice trend line liquidity. So this liquidity is these swing points. What I don't like to see is near vertical trend line liquidity. That is not ideal to target. Because what typically happens when you get these really V shapes, it just tends to slam up and slam back down, and it's not really much we can do in there. This is not what I want to see. What I want to see is trend line at a 45 like that. We do have, it looks like some relative equal highs potentially. Let me see. Yeah, I mean, not perfect, but pretty dang close. So we have these relative equal highs. And what I want to see typically, I want to see equal lows taken. Here's previous day equilibrium. Here's 9:30 opening price. And so we can think that the AM buyers are in profit. So the lunch consolidation is designed to take some of those buyers out as they bought along the way and place stops below swings. And for continuation for longs. So what I like to see is I like to see lunch trading down. That gives me a little more confidence in longs. If lunch was kind of trading up, then I might expect to see a stop hunt and then a sell-off. So yeah, let's see what we get today. You know, we do also have lots of liquidity building below. And that's one thing I don't like. I can show you here on the 15-minute. This was the last stop hunt, which means there is a whole bunch of trendline liquidity right here. Now in an uber, where is it? Where does it say trendline? In an uber bullish market, that doesn't matter. Just you get these little internal stop hunts and they'll continue on. So like here we have a 1 hour low on the 4 hour chart. So we're kind of rejecting from this gap. I don't like that. We're kind of, we didn't close above this fair value gap, so that's not amazing. So let's even just maybe start to think about this aloud. All right, so what we do have is, you know, we have a bullish AM with a, what is it, 80% chance of continuation. We have lunch accumulating bearish, which equals longs. We do have, you know, medium time frame trend line below is caution. We do have medium time frame equilibrium. Or slight discount depending on the range. Caution. We are at 4 hour, 1 hour fair value gaps. Resistance. Caution. So really my idea for the day is, you know, it's, you know, lunch high a day is a question, but I am bullish for the moment and looking long on lower time frame. So that's the idea. That's some of the notes for now. I like these equal lows it's made. So that I like to see. I love it when I see equal lows formed right before. And then like even if it sweeps it now, that's fine. It can go down. But what we want to see is there's this gap right here. And there is this gap we'll mark it too just while I'm there. So the time is 12:34. We're a little early. You know, I want to see it ideally around 12:50. 12:50 is really when I want to see it. Just a second, I'm gonna go shut this door. So let's evaluate the context ahead of time. And so what I want to look at is, before I even get my heart set on taking a long, will I be pleased with the context of that long after I take it? And sometimes it's hard to do all of this analysis in real time. So now that I have the thesis for what I would like to see and I'd be willing to put risk up for, I want to evaluate in further detail. So higher time frame aligned. Here's the question. Is this trade aligned with the order flow, the draw on liquidity for the session? And ideally, just the general order flow. Well, that's a question. Because is this market bearish or is this market bullish? We swept out tons of liquidity, but we didn't sweep this low. We have a daily change in state of delivery. We have a weekly change in state of delivery. So here's this daily volume imbalance price is currently fighting with. This is, the potential for an inefficiency to form. Here's a inverted daily fair value gap. So, we ideally don't want to long into resistance, but we do expect, if we're bullish, for bearish PD arrays to fail. It's just kind of like contextually, it's better if there was no volume imbalance and it was way up here. Here's this volume imbalance and this fair value gap. So I'm being aware of that. Truthfully, if I'm off sides, it's going to probably be right here. Is it worth a shot? Maybe. So higher time frame aligned is unclear. Possibly turning bearish. Time-wise, it makes total sense. Like I was telling you, it makes sense to long now because the AM buyers are getting stopped out and they're in profit. So it makes sense to long for continuation. So yes, time-wise, it makes sense. Discount and premium. Okay, this is mixed because it's yes on the 15-minute. And as we look around on, we're equilibrium on the 15 minutes, so that's cool, discount. On the 1 hour, we aren't. So here we do have a major liquidity sweep. We have a 1 hour liquidity sweep, which is what I want for a continuation play at lunch rate. It doesn't have to be like a daily level. Do we have an IRL target still? Sorta, because we have a lower time frame, yes, but higher time frame kind of is no. No unresolved liquidity below. We don't have any unresolved liquidity. Anything I'm terribly concerned about. So that's a yes. Yes, there is no unresolved liquidity below. No news, higher probability conditions. I'm going to say yes here, with a caveat that noting Friday sell-off. That was just a huge sell-off. And so therefore Monday, it's already a Monday. We just got to be a little bit more on our toes. And then when it comes to the trade itself, is there just displacement? That actually probably shouldn't be context clarity. That's more model, because my model requires displacement in A grade. So we're on the border where I'm gonna say sort of here, because lower time frame is no, but higher time frame is yes. We haven't done a stop hunt. All right, so what does that mean? Well, let's score this. Let's say this is, -1 because it's questionable. Let's say this is -1. Let's say this is -1. Let's say this is -1. And let's say that this is -1. Well, not even. Let's just see what we got. So 1, 2, 3, 4. There's 4. It's -4. So and I just have a scoring system where I get 2 points for each of these. And so that's -4. 1, 2, 3, 4, 5, 6, 7. So 14. So we are on the cusp of conditions where I'm not interested in taking a trade. So let's see what presents. But I'm just making note of that mentally so we are on cusp of no trade context. There's enough going on that here with the context that I'm definitely gonna think pretty hard before I take a trade. So just looking at, the high or low of the days, 150, 4 o'clock, 4 o'clock, 3 o'clock, 4 o'clock. And then now this gets a little confusing because I flip-flop them, but ultimately high a day and low a day were at 10:45. Basically like in the morning. Low a day, high a day was 1:30. High a day was 11:30. So I don't really want to look at these because my mind's not wanting to flip these around because I don't know if so it's a bullish day. The high was 10:30, but there was a lunch rate. I don't know. I'm going to confuse myself if I look at that too much. I like that we're building some trend line liquidity down in here. All right, so we got about 6 minutes until the 1250 macro, and that's really when I'm statistically most likely to see it. Can come a little early, can come a little late. All right, it's looking at ES and YM over here. We are forming 1 hour bearish and bullish SMTs. I'm never really concerned with bearish SMTs in a bullish market. But if we're starting to turn bearish, well, then I am a little more concerned, yeah. We've gone past the 130 ADR, so I'd imagine we'll still continue. We did have a huge expansion on Monday. Where is that? You're on the 1 minute chart. Okay. And even still, we had a reasonable expansion already today. Let's look at this. Let's just zoom out and that's a 800 point day for 3,000 ticks of expansion. Hmm. We're also at a weekly volume imbalance. Hmm. A little bit more consolidation looking than anything to me right here. Look at that. So we're getting some expansion. Here's kind of a breaker. I'm not liking this for a long. So we do have this 2-minute gap. I mean, we swept this low. We didn't tap into the 15-minute gap, though. We didn't. We swept a 15-minute low. We swept a 1-hour low. So here's a 1-minute breaker. There's not a 1-minute inversion in here. And this 2-minute candle did not close above this 2-minute gap here. This is not an A-grade inversion to me. This is not light bulb. It might be a trade, and it might take off and go, if this is breakers your model, but that's not A+ to me. That's not even A-grade to me. Which I'm bummed because it took all this internal liquidity. So had price traded down and created an inversion, like I would have been pretty excited about that because of this local internal liquidity to target and break even at. Right now, if it decides it wants to do that, if it wants to, sweeps this liquidity, trade down and then do something, well, then I still kind of, the buildup of the trend line is a lot of that is taken. There's still this and these equal highs, but I'd rather be patient because I know patience pays, even if I miss some trades sometimes. This morning, patience pays. I just screwed it up down there. Yeah, not quite a discount. There's a tailless 15-minute candle down here. There's 2 untapped gaps. YM is not in sync. Yes, yeah, YM's all over the place. YM's on the 15-minute, very, very, very choppy. So that 2-minute inversion, probably not going to confirm. This one right there. least not in this candle, what I mean. This candle came back down and balanced this inefficiency. Like maybe I'd be okay with if it, you know, came up in here and created another high to match these, and then started creating some trend line on the way down kind of thing. Then maybe that. But I'm also not confident that today is going to give much more than it already has. We shall see. You know, it can change pretty quickly. I feel like I've walked away from the charts a lot of times going, man, I don't think anything's going to present itself in the next 20, 30 minutes. And I think, oh, it's going to be an hour from now. And then I'll come back and price moved significantly from where it was, maybe even presented a setup that I was looking for, and then went without me. But what I will say is, you know, we don't have equal lows. They were already taken. So a lot about this is kind of not giving me tons of confidence in a setup, but we'll see what the candles do. Now, one of the things that I've been working on is my trading scorecard or trading performance. And this is just basically the consistency lab. It builds consistency to improve results. And I've already noticed a pretty solid improvement in my trading performance, and therefore well, you see the trading performance. And what I'm trying to say is it's made a significant improvement in my P&L. And today's a B+. That's the first B day I've had so far. Let's review this. My rules were followed 90%. I mean, technically my rules were followed 95%, probably higher. But I screwed up, and I want to like give myself a ding for that screw up. My emotional control was actually probably top notch today, because maybe now that I rethink looking back on the morning session, like I sat on my hands until it was perfect. And then when it stopped me out, I still stayed out. That's pretty elite emotional control. Setup quality was high, 95. I'd leave it at that. Context quality, which means, you know, like I just reviewed the context, so it was pretty high. Execution management, 100%. So I realized minus 1R, and I missed 1.75R. And so what this does is this dings me because it takes out points because I missed that 1.75R. So, okay, so I readjusted that. I'm still an A-, but I have missed 1.75 missed R today. That's a bummer. But I'm really liking using this. Ooh, capture quality. Leaking edge, I've lost 40% of the R. Realized R is 1.5, missed R is 2.25, so we can see I've missed more. And there's not a lot of data here, so that means it's like, you know, I missed, because if you look at it by days, you know, 1, 2, 3, 4 out of 6 days, I captured all of the R that was available. And then on 2 days, I missed. So yeah, just noticing that performance and curve trend, we can see that there, and as more data populates, this will become more interesting to see, but above a 90% so far for my performance. And then my process breakdown, we can see the setup quality is probably the lowest on my radar chart. And then, now this doesn't make tons of sense. I might have to look into this. These are not red days. Then, oh, I bet it's duplicating data. I bet you so. So this is duplicating data. So I'll have to revisit my luck versus discipline, but ultimately it just tells you, You know, was it a lucky green day? Did you break your rules and win? Was it a disciplined green day? Did you follow your rules and win? Was it a process failure day? Like you broke your rules and you lost? But also, is it a disciplined red day? Like you followed your rules, you did what you're supposed to do, and it just was red. That's what this scatter chart does. But I need to edit the code that is currently displaying this. I added a feature to, and I know you can't see this, but so I can select my journals. I have different journals. I have a backtesting journal, and then I have a live trading journal. So I just added that feature, and then that means I forgot to update the scatter charts. So yeah, let's go back to the 1 minute. So really just consolidating. I like that. It's still building more trend line for a long, like locally down in here. We still have these equal highs up here. Relative equal highs, not perfect. It's 12:58. So within the next 5 to 10 minutes, I'd like to see something happen. We did get a breaker, no IFVG, no take. And right now, I'd like to see it break down pretty quickly. I want to see this accelerate and just create a V. And we have about 15 seconds left on this 1 hour candle. So we can see the 12 o'clock candle was a bit of a compression candle. It opened high, low, and then closed. And now we have a new 1300 candle, 1 o'clock. And so this candle, I want to see open, low, high, close. There we go. We got some nice acceleration. I want to sweep this low. I want it to tap into that gap. There's a 15-minute tailless candle right there, tapped. All right, so I can start sizing up, just kind of getting some baseline for where I'm at. Just pretend that's the inversion. I'm reducing my risk a little bit this week, just feeling like I might trade a little bit better with lower risk. I did pretty good last week, but I wanted just to experiment with lower risk. Which I guess also makes sense given the context is slightly questionable, like borderline. All right, so let's see here. 1 o'clock. So here's an inversion, some beautiful targets. The context is just what's got me a little hesitant. 1 hour or 15-minute SMTs are forming. We'll probably confirm because I don't think it'll sell off that far. I wish we had some local SMT, like a double SMT. That would really help me feel more confident. Well, let's see what it does. It might just also sell off. There's more gaps below. We have this gap down in here. So here is the 930 open being retested. So at this point, I really want to see a new gap form, but I also don't like how far away this liquidity is. I would have liked this to have been the gap that confirmed for a long. We start getting too far down in here, and then we just have kind of a bunch of open gaps. So here's a gap right there. Now that's not exactly what I want to see. I don't want to see it sell off too hard. I do like it's tapping into this gap, but it's not really leaving much in the way of local liquidity right here. So we'll see. Kind of have this huge gap now because there's 1, 2, 3 right there. We do have SMT. Technically, this is if this confirms above, it's a valid trade setup. Now the gap is huge. More than likely. And this market's moving so much that one contract right there is $100 risk. It's hard to size down. So there's 110 for that one contract. I was trading 200 risk per trade, and my target for these accounts are 250 per trade. But I just wanted to back off on the amount of risk to just help improve my psychology. I'm not in a hurry, and I'd rather have trading consistency. So interesting. So, now we don't have on the 2-minute, we don't have a gap there. So that changes it a lot. Oh, the 1-minute has this gap here, but we also have this gap and this gap. So I think I'd be interested in potentially the 2-minute gap. And this is a tough scenario where sometimes the 1-minute gap gives you enough to get at least a take profit, partial and break even. But then if you were to take the 2-minute gap, that's the trade that would fail. But also the 2-minute gap is going to have more confirmation. So it's a double-edged sword. Let's see what it does. It might not confirm anything. But ultimately, this is exactly what I want to see for a lunch trade. The only question is, am I on sides? The 4-hour could be rejecting from the 4-hour fair value gap. The daily could be rejecting from the daily volume imbalance up in here. I like the look of this 15-minute candle so far. And then if we think about this 1-hour candle, there's only such a minor wick up here at the top side. It would make sense to be open, low, high, and close, right? The black line is the candle opening price for the 1-hour candle. I need to adjust my camera. I keep saying that. I keep slouching down. And I can't seem to remember to correct my posture. All right, so that candle, bullish, but not a solid candle. We want to see this next one or two really just kind of show some displacement and V out of here. And time is 1:09, so I'm cool with taking this trade because sometimes they can be a little bit late. But if it trades down any lower and starts forming another setup, I'm not interested. So tailless candle right there, coming back down. There's a volume imbalance right there, but nothing else. So maybe if this candle accelerates towards buy side, I'd like that, but there's not much down here for this to go for. So that's not the strongest bullish signature unless this or the next candle pretty aggressively comes back up. Looks like we also do have a 3-minute gap. Yeah, it's not looking so bullish in terms of the reaction at the moment. Let's see what happens. Formed those equal lows right there and just swept them. Look at that, relative equal lows, just swept them. And doesn't look like it's going to do a lunge trade. So we still didn't hit consequent encroachment of that fair value gap. We pushed through that one. We tapped, balanced out that tailless candle right there. So we do have this inversion forming. What I wouldn't like, though, is when you get this kind of setup down in here, that seems lower probability to me. I guess what I mean is what I want to see in price action is like, if this is a low, a single sweep, and then just V-shape out of it. What I don't want to see is if this is the low. Oops. What I don't want to see is if this is the low, price come down, takes the low, trades up, takes that low, and it maybe just starts doing this, you know, kind of thing. And which one's going to be the one that reverses, right? I don't want to see that. But I'll wait for a couple more minutes. I guess we have 2 minutes until the next 15-minute candle. We are in a nice discount, which kind of adds to the positive context perspective. The not having any unresolved liquidity below, at least on the 15-minute. So let's see, do we have any SMT here? No, that helps me when I got these kind of setups. I do like that this candle touched the consequent encroachment on the 15-minute gap. See, right there. Now that's a heavy 15-minute candle, though. That's a super strong response. I like it. But I don't like how it's created a failed inversion right there. We have a tailless candle here. We do have a swing high, the target. There's no 2-minute inversion. All right, we've got a new 15-minute candle now. It's either long from here or it's bearish, one of the two. What's it going to be? I'm not liking how it didn't close above that. I mean, it has to close above for me to enter. But I'm curious to see how trustworthy this setup's going to be if it didn't really create tons of momentum and V-shape out of this. It's sort of V-shaped, but just these two little candles right there kind of took the wind out of my sails for that. And I'm definitely on the fence of like, should I take this trade? I'd really like it if price just decided for me by not closing above. Because if it closes above, then I got to make the call and live with that choice. And I'm not sitting here going that this is A plus, this is light bulb. Like it is in some ways. When I look at this lower time frame, it's pretty dang nice. The exception being this extra swing low right down in there. But I also am keeping in the back of my head the context for everything I already said was questionable. And I did have the one I was wondering if it's going to be an odd day where essentially lunch is, or I guess this is late New York AM session technically, is the high of the day. And I got that in the back of my head. This looks like a perfect lunch rate setup. If the higher time frame wasn't questionable, I would take this 1,000 times without hesitation. But it's definitely giving me hesitation. So I'm going to call it at that. I feel like at this point, I'm just forcing it. It might do it, but I'm okay with it doing it without me today. So yeah, I guess no trades for the lunch session. Let's go to the trading scorecard. I can add that in here. So my rules were followed 100%. My emotional control was 100%. There was no setup, and I did not miss any R. So I'm going to save it. And yeah, let price do what price wants to do without me. I'm going to take